over the last month, the government announced a slew of measures to counter slowdown and revive the Indian economy. In what economy watchers called a mini budget, the government announced major rate cuts. The most important being reduction of corporate tax rate from 30% to 22%, thus effectively bringing down the corporate tax rate from 35% to 25% in case of companies who do not claim specified deductions and exemptions. For such companies, MAT does not apply. For others, minimum alternate tax rate has been brought down from 18% to 15%. With these rate cuts, India is the lowest amongst the BRIC countries, next only to Russia, and the lowest amongst the developed nations, next only to US and UK. With these rate cuts, India is promising to be a business environment and reduce the...
In order to boost the manufacturing industries, the Income Tax Department with this new ordinance has brought in certain steps essentially required for the purpose of manufacturing, as there was some slowdown in the past. So the important points were any manufacturing entity sets up after 1st of October 2019 will have a tax rates of 15%. However, they will not be entitled for certain benefits. Then it is at the options of to switch from 15 to 22 or 22 to 15. The biggest issue or the challenge remains with whether the MAT credit is available to them or not is the biggest challenge that they will have. Thank you.
A couple of measures which are announced by the government which are relating to the financial market includes removal of surcharge on the FPIs and as well as removal of surcharge in respect of equity and equity related instruments which are traded on stock market for the Indian resident non-corporate entities as well. Further, the buyback tax which was made applicable even for listed companies, now the clarification has been issued that will be applicable only for public announcements which are made on or after 5th July 2019. So these are the significant changes which will improve market sentiments going forward. Thanks.
Through the new tax ordinance, entities can now spend their CSR fund on incubators funded by specified agencies. This move acts as a catalyst to the R&D, growth of R&D and product invention and to the startup community at large. Also, the companies will be able to outsource their R&D activity going forward. I am bullish that the spending on incubators, technology incubators, will substantially grow from now.
The 37 GST Council meeting has brought in a host of measures for the consumers. The most important one being the Diwali Dhamaka or the Festive Dhamaka, where they have done away with the controversial circular on post-sale discounts and rescinded that ab initio. Other measures were announced in terms of hospitality, transportation and other industries, which will increase consumer demand and impact the economy in a positive way.